Well, hello there. It's Tyrone Jackson, the Wealthy Investor. And guess what? It's time for you and I to have a discussion about stocks that you and patterns that you may want to think about right now in your stock trading account. Now, when I'm teaching you how to trade and invest in the stock market, I prefer to keep things really, really simple. And as we move on, I expand the story. Well, in this particular lesson, I am going to strive to keep things simple, but I want you to get a bigger concept here about trend. Okay? And if you're new to this channel, do me a favor, go ahead and click subscribe right now. So every time I post one of these really important lessons, you'll get a notification. Now let's take a deep dive into a technology company, because in this company, I'm going to highlight one S&P stock and then another Dow stock. This is Advanced Micro Devices. Many of you know it as AMD. And look at this company's performance over the past 5 years. So in the Wealthy Investor Program, we're always looking at trend. How has the stock performed in the long term? We don't do anything with hot tips or recommendations. We look at trends. Notice here at 9/10/2018, this stock peaked at about $32 a share. It pulled back, slammed all the way down to 19, and boy, did it start to rise quite nicely. Now, there's this myth in the stock market you have to catch your shares at $2. That's not true. When do you want to catch your shares? When the revenue on the top line starts to sequentially increase. And that's what happened here at AMD. You see the stock has a history of peaking and pulling back. Is 83. It slammed all the way down to 78, followed by a very, very strong retracement. Now, I want you to notice what happened at 12/17/2020. We saw the market widely react to the coronavirus, which causes the hedge funds to sell off a little bit or to stop out. When that happens, it's a grand opportunity, because notice the shares all the way down at 81.05 and they're starting to retrace. So this is a great time to pick up the shares and hold them for the long term. So since we don't have to grab shares when they're around $2, how would you feel if you caught these shares when they were around what? $30. Would you be happy today? Yes, because when that revenue starts to increase, that's the cue to pick up the shares, not when the shares are cheap. And remember, I'm the one who's actually telling you this right now. When you're seeing shares that are below $17, that means there's no demand for them. So what good are cheap stocks if there's no demand? Back to Advanced Micro Devices, doing very, very well. Now, what does the company actually do? They're in the semiconductor space, okay? And they also have another division that has to deal with video cards. So imagine if you could develop a video card that looked really, really good, and the signals that traveled through the devices move faster. That speed, it's what we all want. If you're a company selling products and services like that to manufacturers and the United States government on a long-term contract, the chart would look like this. Remember, I'm always telling you, don't buy the stock if you don't understand the story. If you don't understand how the company makes money, don't buy the shares. So we know they're in the semiconductor business and they're in the video card business, and they keep developing new areas of exploration for everything that goes inside your handheld device, and they have long-term contracts with revenue increases built in. Do you get the picture? I'm trying to guide you through the idea of you're always buying stocks that are winners, and we call them dates in the Wealthy Investor Program. You're always dating really good companies instead of leaving things to chance. So that's our S&P component. How about our Dow component? I shouldn't even really have to tell you the name of this company. It's the Walt Disney Company. Now, I'm going to tell you why I really like it so much. Not only is the revenue here, but the long-term trend is this. 5 years ago, the shares were trading at around 97, and they're going to cross 200 not too far from now. Now, what a lot of amateur investors say is, I don't want to buy stocks that are expensive because I can't afford that many shares. But why is Disney trading around 194 right now? Because it's proven. In real estate, you buy low to sell high. In the stock market, you buy high to sell what? Higher. Okay? So not only does the 5 year chart look like this, which means Wall Street likes it, but look at the 2 year chart. After this pullback that we saw here, right? What happened to the shares? They really took off. Why did the shares take off during the coronavirus, even though Disney hotels and theme parks were closed? I'm going to show you exactly what's causing the revenue to rise here. It's a little something called Disney Plus. That's right. You got it. See this figure down here? Remember, it's all about revenue when you're investing. See this figure down here that says $6.99 per month? That figure is going to rise. And we just found out last week that Disney has over 100 million people worldwide paying what? $6.99. What's going to happen is over the next couple of years is this number is going to go higher. Why? Disney Plus wants to be on par with who? Netflix. Is Netflix $6.99? No. So it's the revenue that's going to come from Disney Plus. It's also going to come from the theme parks reopening that's going to cause this stock to go even higher than where it is right now. So check this out. If the market likes the shares during COVID with the revenue that's been coming in from Disney Plus and the absence of revenue that's been coming in from the theme park, what is Wall Street going to do when the next round of revenue is delivered to the public that includes the theme parks? Do you see where I'm going? Okay, so what is today's lesson all about? It's all about understanding the long-term trend, not getting cheap stocks, getting stocks where the revenue is rising so you have this kind of pattern in almost every single stock that you own. When you understand trend and you have the right financial education, you are unstoppable as an investor. And that's where I want you to be. Okay? So these days, it's simply not enough to have an online trading account if you don't have the right strategy. Here at Wealthy Investor Trade School, I teach you the strategies on all of the stocks that Wall Street likes so that you can trade them for fast money if you want, but you have to know which ones to hold for the long term. Okay, so if you really want to follow my trades, you could always start your membership here at WI Trade School. It'll be the best thing that you've ever done for yourself this year. It's the greatest gift that you can give yourself. Why? Because I like to keep the stock market nice and simple and show you the easy strategies that work, whether stocks go up, go down, or stay the same. Remember, your wealth is in your thinking. It's also in your financial education. Hey, I'd like to hear from you. If you like this lesson on trends and revenue, leave a comment. And I really do actually respond to mostly positive comments or any of your curiosities that you may have, right? Why? My goal is to help you get ahead in the stock market a little sooner, a little faster, without losing money because you learn how to date winning stocks. Tyrone Jackson, a wealthy investor, saying, I look for your questions, but I'll see you right here next time.